Good day, everyone. We are the Module 7 in Monetary Policy and Central Banking, and our report will be about balance of payments. And before we start our presentation, let me first introduce to you my members. Me, I'm Randall Jan A. Wanga, and my group mates are Season Kavin, Cassandra Tangonan, Kirsten Torzar, Paula Umagat, and Irish Velestero. So the learning objectives of this module are: first, explain the international trade and its connection to the balance of payments. Second, delineate the role of the balance of payments. Third, distinguish between debit items and credit items terms in the BOP. Fourth, explain the overall BOP position. And the last one, analyze the causes of BOP and the possible solutions to this. So let's realize the situation kung bakit nag-i-import at nag-export ang isang country. Kapag sinabi natin kasing poor ang isang country, ibig sabihin limited ang resources na meron sila, as well as yung limited din yung capability nila para mag-acquire ng items. So when we say exporting and importing, nakadepende siya sa isang bansa kung anong gagawin niyang option sa dalawa. Kapag naman exporting, ibig sabihin siguro maraming resources ang meron ka sa bansa mo, kaya ka nag-export to other countries. Kapag naman nag-import ka, ibig sabihin konti lang yung resources na meron ka nun, and you want to increase it by a large number, and in that way kailangan mong magkaroon ng connection sa iba't ibang countries. So kung i-relate natin sa international trade ang ating bansa, nasabi na ang mga poor countries ay gumagawa lang ng trading by using their agricultural crops and materials. Para saan? Para yon sa pakikipag-exchange nila sa other countries for the modern technologies and equipments na wala sa bansa nila. So as an example for the international trade, makikita natin dito sa table na ang pinakamataas na percentage na na-trade sa isang bansa ay ang electronic products. Like, ayun makikita niyo po sa screen. Like the microwaves, TVs, and next doon ay yung mga other manufactured products. Gaya ng mga nakikita natin sa mga stores. And next is yung mga transport products, gaya ng mga ginagamit sa mga paggagawa ng building, anything na ginagamit for the service of business or for everyday life. So if we're going to compare it in 2022, we'll see that the highest percentage now as we import are the coconut. Next are the electronic products still, while some went down, such as the electronic wirings or anything, but it only means that country is having an enough supply of those things na bumaba sa importation, and it's a good sign na nagde-develop ang isang country. There are two bases for doing an international trade. First, the distribution of economic resources. Alam naman natin na unequal ang distribution ng resources sa isang bansa. Let's just say na sa Philippines, merong resources tayo dito sa Philippines na abundant talaga, or kumbaga marami, sobrang rich natin. Pero on the other side, meron din tayong mga resources na kulang talaga, especially if dumating yung time na nangangailangan tayo. And dun na pumapasok yung international trade, kasi kung makikita ng isang bansa na kulang sila sa resources na ganito na ganyan, pupunta sila or makikipag-communicate sila sa bansa na rich in that specific material na kailangan nila in order for them to have it, and they'll do it by trading. So to give additional information para sa abundance ng economic resources, let's check this top 5 manufacturing countries in the world. So nanguna syempre ang China, next is the USA, next is Japan, then Germany and India. So, malaki ang chance na dyan nakikipag-communicate ang poor countries o yung mga less developing countries whenever they need manufactured goods or kumbaga yung mga electronic gadgets or mga technologies na wala sa bansa nila in order for them to develop or use it in their country. So, next basis for doing international trade is what we call technological efficiency. So, kapag sinabi natin technological efficiency, ito yung mga times na kumbaga nagkakaroon ng kino-compare ng isang bansa na may interest in importing and exporting ang prices kung saan ba sila mas makakamura yet effective din. Kumbaga, ikumpara na natin sa cellphone or Android against the iPhone. So, bilang isang buyer ka, kukumpara mo yung price ng both items. And kung titignan mo yung experience mo sa paggamit nun, i-weigh mo kung ano ba talaga mas prefer mo. And if mas prefer mo yung mas mura yet gives you the same experience, edi dun yung maging option mo, diba? So, same lang siya sa technological efficiency. Bilang isang country na less developed or kumbaga poor country, dapat talaga maging wise ka in using the enough funds or the funds left in order for the improvement of your country, as well as ma-weigh mo yung mga options na meron ka and pick out the best in those options. So, in doing international trades, meron po tayong 4 advantages. First is the variety. Why variety? Kasi knowing na transact tayo sa ibang bansa, magkakaroon tayo ng iba't ibang options na pwedeng piliin in terms of choosing the best one. Gaya nga nasabi ko kanina, in doing international trade, hindi pwedeng sa isang bansa ka lang titingin. Kasi it limits on the things na pwede mong pagpilian, and bilang isang poor country kang, dapat ay maging sigurista ka in terms of kung saan magagamitin yung pera. And in having variety, it will give you more options and more reasons on what to pick. Next is efficiency. So, kakasabi ko lang din kanina yung about sa technological efficiency. Dapat bilang isang country, makapili ka ng best country na kung saan makakahanap ka ng same product or similar product which will give you the same experience or the same benefit but in a lower cost, or kumbaga mababa lang yung kapalit. Kasi 'di ba, bilang isang poor country ka na nga, magiging limited ka kasi in doing transactions with other countries kung pipili ka ng mahal na nga pero may defect naman pala when it comes to the usage. So the third is the specialization. When we say specialization, meron talaga kasi mga countries na specialize ang ginagawa nilang material. Kumbaga, kahit maraming gumagawa ng same material na yun, kapag nabanggit yung bansa nila, yun kagad yung maiisip na product na ginagawa nila. Which it will become beneficial for them in the long run kasi maraming bansa magiging interested sa product na yun or sa material na ginagawa nila. Kahit pa marami silang kakompetensya in the market or in this world. Kumbaga, in the international trade market, diba? Parang they'll be the standard sa kung paano mag-a-adjust yung ibang bansa in terms of dealing with other competitors. And lastly, the fourth advantage is interdependence. Pag sinabi natin interdependence, inter, which means different, and dependence, which means being dependent. So, pwede ka maging dependent sa iba't ibang countries na meron kang connection. Gaya nga na sinasabi ko mula kanina, ang hindi kasi pwedeng isa lang yung talagang pagkukunan mo na kung anong material na yun. Kasi, mangyayari talaga na mawawalan din sila when time goes by, diba? Kumbaga, in this year, baka talagang marami silang ganun, and in the next year, baka wala na or kulang na. Kumbaga, they'll just use it for their country itself. Kapag naging interdependent ang isang bansa, ibig sabihin, may mga plan B siya, plan C. Let's just look at that way na ang interdependence, kumbaga ma-distinguish natin siya as having a plan B, plan C if plan A did not work in the first place. Kasi nga, your plan A didn't work, so ready ka na meron pang magkaroon ng iba pang connection sa ibang bansa dahil dun sa pagiging interdependent mo.
Balance of payment is an annual accounting statement of all financial transactions of a country with the rest of the world. It appears like a profit and loss statement of a business corporation. So balance of payments determine the overall performance of a country yearly. Ito yung process ng pagiging involved ng bansa sa international trade ng goods and services around the world. This includes transactions of individuals, businessmen, and government agencies. If ever man magkulang yung bansa natin para sa mga international transactions na to, BSP has to draw on its official monetary reserves such as gold, dollars, and etc. So if ever man kung mangyari lang na hindi pa rin sapat yung foreign reserves natin, dun nangyayari yung nag-a-avail ng foreign loans yung BSP. So for example, pag may mga factories na nagsara tapos hindi sila makapag-import ng materials, pwedeng mag-avail yung BSP ng foreign loans sa World Bank. Next is balance of trade. It is a situation where value of exports of a country is equal to the value of its imports. This pertain only to goods. So dito, balance lang dapat yung imports at export ng isang bansa. For example, if a country has a 1.8 billion worth of imported goods, then there should be a 1.8 billion worth of exported goods in able to have a balanced trade. This is only for goods and services are excluded. Visible items refer to goods in the balance of payments. So, ito yung goods na ginagamit for import or export. They are physical goods which are made of some matter or material and can be seen, touched, and measured. Example ng mga ganitong goods is yung oil, machinery, foods, clothes, and etc. Then we have invisible items. This pertains to services in the balance of payments. These cannot be weighted and it is bought to other countries or bought by the other countries. For example, services of shipping, banking, insurance, and also incomes from foreign investments. Next is surplus balance of payments. It is receipts or income greater than payments or expenses. It is a situation where receipts or income is greater than payments. Occurs when a country's total export are higher than its import. So, mas mataas yung export sa bansa which is nakakatulong sa pag-generate ng capital para sa pagpa-fund ng mga domestic productions. Then, we have deficit balance of payments. It is where receipts is lesser than payments. So, kabaliktaran lang ng surplus. Meron isang article na nagsabi na Philippines lags largest trade gap in 5 months. It is where the trade deficit in the Philippines widened to $5.74 billion in January 2023. It is from $4.55 billion in the same month the year earlier. This was the largest trade gap since last August as exports dropped further while imports rose. So dito, bumaba yung export ng Philippines. Mas marami tayong naging imports. And then we have credits. These are the receipts of individuals, organizations, or government coming from another countries. So, funds entering a country from a foreign source are booked as credit. So, pag yung funds ng individual or institution is galing sa ibang bansa, for example, yung salaries ng overseas Filipino workers natin, or yung export earnings, this represents the exporting of an item such as good, service, or stocks. Nakakatulong to para makadagdag or madagdagan yung supply ng foreign reserves ng bansa. Last, we have debits. These are the payments of individual organizations or government of a country to other countries. In short, these are the outflows of resources from a country. Dito naman yung pag nag-a-attain ng obligations yung bansa towards sa iba pang bansa. Debit adds to a nation's demand for foreign currency. Nangyayari to pag may mga imports na dumadating sa bansa. So, examples nito is yung donations ng tao or bansa like cash, books, or equipment para sa Africa or iba pang bansa na may kailangan. Or yung pag-i-invest sa foreign country.
And I am Umagat Maria Paula. Our next topic is the international reserve. It is also known as foreign reserve or foreign exchange reserve. It is the asset held by the country's central bank, such as Bangko Centrals of the Philippines. It is in order to manage and support its international transaction and financial obligation. The reserves typically consist of foreign currency, monetary gold, and other liquid assets that can be readily converted into foreign currency or those investment in foreign issued security. These assets are held primarily as a safeguard against potential external shocks or crises that could affect the country's currency, economy, or financial system. The BSP may also use the reserves to intervene in the foreign exchange market to manage the value of the Philippine peso. So next is the components of balance payment. So what is the balance payment? It is a record of all economic transactions between residents of the country and the non-residents or the rest of the world over the specific period of time. Ito yung mga records ng economic transaction natin as a resident to other non-residents of the country. BOP has three main components: the current account, the capital account, and the financial account. The first is the current account. The current account records a country's trade in goods, services, primary income, and secondary income. Yung trade in goods, ito yung import and export of physical goods such as cars, clothing, electronics, and foods. Sa trade in services is the exchange of intangible services such as tourism, transportation, and consulting. Sa primary income, ito yung mga income earned by factors of production such as labor and capital. Example nito is yung mga sa OFW. Sa secondary income naman, yung the transfer of funds or resources without any exchange of goods or services. It is the unilateral transfer which refers to the movement of funds or assets from one country to another without receiving anything in return. In other words, they are one-way transfers of money or asset, such as foreign aids and remittance aid. Itong mga nabanggit ko na to is, ito yung mga transaction na nire-record sa isang current account. Additional information. A surplus in the current account indicates that the country is a net lender to the rest of the world or yung nagpapautang. Conversely, a deficit in the current account indicates that the country is a net borrower or yung umuutang. So, kapag ang total value ng export and receipt is greater than the total value of imports and payment, the current account balance is in surplus. Conversely, if the total value of imports and payment is greater than the total value of export and receipts, the current account balance is in deficit. So the second component is the capital account transaction. The capital account records capital transfer, which refers to the transfer of ownership of fixed asset, the acquisition and disposal of non-produced, non-financial assets between resident and non-residents. So not in the module, capital account transaction also include the grants and donations intended for investment purposes, such as funding for machinery and equipment, buildings, and structures. These transactions are recorded in the capital account because they involve the transfer of ownership of the assets. Ang capital transfers, ito yung transfers of ownership of fixed assets or financial assets between residents and non-residents. Ang acquisition and disposal of non-produced, non-financial assets naman is yung purchase or sales of assets that had not been produced such as patents, copyright, and natural resources. Yung grants and donation, funds given by foreign governments or international organizations to support development projects. So, itong mga transaction na to, it is recorded in capital account transactions. So, the last component of balance of payment is the financial account transactions. The financial accounts records transactions that involve the acquisition or disposal of financial assets or liabilities between residents and non-residents. The financial account is divided into three categories. Ito yung direct investment, portfolio investment, and other investments. Ang direct investment, it refers to the acquisitions or disposal of a long-term interest in an enterprise operating in another country. Ito yung mga investment in which the investors own a significant portions of the ownership or control of the company, such as mergers, acquisitions, and joint ventures. Sa portfolio investment naman, it refers to the acquisition or disposal of equity or debt securities. Ito yung investments na ang investor does not own a significant portion of the ownership or control of the company. It is the stocks, bonds, and other securities. Yung other investment, it includes the transactions in currency and deposits, loans, and trade credits.
So, the overall balance of payment position. The overall balance of payment position is a summary measure of the performance of the country's external transactions. So, from the word itself, countries, external transaction. Ano ba yung transaction ng bansa natin to other countries? Isa sa biggest transaction na inaano ng bansa natin is the import and the export. So, from importing, madalas na nag-i-import tayo ng goods, like ng products or services from China. So, yung transaction na yun is mako-consider na country's external transaction, which means na may importation na nagaganap between two countries, which is the Philippines and then the China. How about in terms of exportation naman? Sa exportation naman, it can be considered as country's external transaction kasi tayo naman yung naglalabas ng produkto or services sa other countries. In terms sa produkto, nag-offer tayo ng agricultural products like saging and then mango. Kasi since we are the tropical country and tayo ang nagpo-produce ng mga tropical fruits like mango and then saging, nag-export tayo ng products na ganun. And one of the example of the country na meron tayong transaction na ganun is the country Korea. So, dun pa lang meron tayong country's external transaction between Philippines and then Korea. And then sa services naman, in terms of services, diba, goods, products and services nga, dun naman papasok sa services yung OFW. So, nag-offer tayo ng service through overseas Filipino workers. So, nagpapadala tayo ng mga OFW sa iba't ibang bansa to offer services. It could be in-house services or the construction services. So, dun pa lang meron ng transaction na nangyayari. And then, papasok din dito yung country's external transaction, which has to do kapag salary na ng OFW. Na-receive na nila yung summary and then magre-remit sila ng dollars sa atin. So, dun pumapasok yung transaction na country's external transaction, which has to do something with the overall balance of payments position. So, there are actually two approaches in which we can estimate the overall balance of payment position. Yung dalawang approaches na yun could be, one is the change in net international reserves due to transaction, and the second one is the sum of the balances of current account and capital account less the balance of financial account, excluding the assets or liabilities ng Bangko Sentral ng Pilipinas. So, dito pa lang, dun sa two approaches na yun, now, pwede natin ma-estimate yung overall balance of payment position. May napanood ako sa YouTube which has to do something with balance of payment position nga. There are actually two positions in which we could see whether the country is nasa magandang position siya ng balance of payment or hindi. Number one is the surplus and number two is the deficit. According dun sa napanood ko sa YouTube as other resources, when it comes to a country, let's say yung Philippines, kapag mataas ang importation nila and less yung pumapasok na pera, ibig sabihin nun, yung overall balance of payment position ng Pilipinas is in deficit position. Kasi, tayo ang nagbibigay ng pera. hindi pumapasok sa atin yung pera. So, it could be considered from that situation na yung balance of payment position ng Pilipinas is in a deficit position, which means in a negative position of balance of payment. And then, pag naman, more on exportation tayo, and then less yung importation natin. Ibig sabihin, tayo yung napapasukan ng pera. Less yung nagbibigay tayo ng pera. From that situation or from that case, ibig sabihin nun, we could consider that our overall balance of payment position is in a surplus position or in a positive position. So, lagi lang natin tatandaan na kapag position or kapag more on tayo ang pinapasukan ng pera, yung Pilipinas is pinapasukan ng pera, nasa magandang position tayo ng balance of payment. Pero kapag tayo ang naglalabas ng pera, okay, yun yung negative, yung balance of position natin. So, yung two ways or two approaches na sinabi ko, it's just a way. It's just an approach or method para malaman natin kung ang overall position or overall position ba ng balance of payment ng country natin is in a good position or in a bad position. And that can be through change in net international reserves, and then yung sum ng balances ng current account and then capital account, ililess mo dun sa financial account. Now, let us move forward in knowing what is the international investment position. So, other than the overall balance of payment position na na-discuss or nabanggit ko na kanina, there is also what we call the international investment position, or which can be in a short term called IIP. So, ano ba tong IIP na tinatawag? Actually, itong IIP na to is a companion framework to the BOP or balance of payment statistic. Actually, the two has a clear distinction or a clear difference between those two positions, which is the balance of payment position and the international investment position. So, ano yung pinagkakaiba nila? Yung BOP kasi, or yung balance of payment position, is has to do something with the flow estimate. Kasi nire-record nila yung transaction at a given period. Wherein sa IIP naman, which is the International Investment Position, ito naman is yung stock estimate, which is nire-record nila yung foreign financial assets and then yung financial liabilities outstanding as of a certain period din. So, from the word itself, estimates, yung balance of payment is more on nagpo-focus siya sa flow estimate, wherein yung internal investment position, nagpo-focus siya sa stock estimate. So, from the word itself, investment, papasok dun yung stock. And then, dun naman sa balance of payment, papasok dun yung transaction ng country's import and export or your external transaction of our country to the other country. Now, actually, based on my understanding, since this has to do with investment, and stock estimate yung focus ng internal investment position na ito, based on my understanding, kapag ang stock market, let's say, ng Pilipinas is in a good position, ibig sabihin, marami ang mag-i-invest doon. Even the foreign stock investor, mag-i-invest din sa Philippine stock market. So, ibig sabihin, no, nasa good or nasa positive stock market position tayo or internal investment position tayo. Kasi, the more na maraming foreign investor ang nag-i-invest sa stock market ng Pilipinas, ibig sabihin nun, syempre, positive yon. Ngayon, masasabi lang natin na negative ang internal investment position natin kapag, syempre, walang nag-i-invest dun sa market natin. Ibig sabihin yun, it is just an indication na walang tao yung mga pera, walang pera yung mga tao na pang-invest ng mga stock sa stock market natin, in which kailangan natin ng help ng mga foreign investor para maging ano yung stock market natin, or para maging in a good condition yung internal investment position natin. So parang to make it simply short, ganun kung paano na ano yung position when it comes to international investment rather. Now, actually, di ba, kanina, sa balance of payments, meron tayong two approaches para ma-estimate yung position ng overall balance of payment ng isang bansa. Ngayon, meron din tayong estimation, or meron din tayong formula in knowing what could be the position of our international investment ng bansa natin, which is the Philippines. Actually, the balance in the international investment position is that asset is less than liabilities, or the net internal investment position. So, parang in determining the net international investment position, yung asset, ilaless lang natin or i-deduct lang natin sa liability. It is actually a measure, or it actually measures the country's financial standings with the rest of the world. So, meaning to say, itong estimation na to, hindi lang mini-measure yung country natin, pero the rest of the world. Kumbaga, inirarank ka. Gamit tong estimation na to, inirarank ang bansa natin, other the countries, international investment position. So, actually, in here, there are two where we could actually know whether yung position natin is in a good position or in a bad position. Ngayon, in a good position, malalaman natin na ang international investment position natin is in a good condition kapag ang net asset position natin reflects dun sa net claims of residents on non-residents, and thus this may indicate as a stability, as a some sort of stability in our international investment position of our country. Ngayon naman, kapag ang net liability position reflects to the net exposure of residents on non-residents, this could mean na yung internal investment position natin is in a negative position, which means it could be an indication na vulnerable, or it could mean na ang position natin is in a vulnerability position. So, yun lang yung dalawang position natin, which has stability and then vulnerability.
Uses of BOP and IIP. So, before ko i-discuss kung ano nga ba ang uses ng BOP and IIP, i-define ko muna kung ano nga ba ang mga ito. So, BOP stands for Balance of Payment. So, ito yung mga annual accounting statement of all financial transaction of a country with the rest of the world for a specific period. Ang IIP naman stands for International Investment Position. So, ito yung companion framework to the BOP statistic. It is also a stock estimate as it records yung mga country's foreign financial asset and liabilities. So, let's proceed na sa uses ng BOP and IIP. The BOP and IIP are important tools for national and international policy formulation as countries have increasingly become independent. Policymakers are guided by the analysis of sources of imbalances as presented in the BOP and IIP. So, first is to become better equipped in determining and implementing adjusting measures. So, para mas maintindihan or maging maayos yung mga equip para sa pagpapatupad at pag-aayos ng measure. For example is, nagmula yung deficit sa current account sa mas mababang export of goods kaysa sa imports. So, given sa scenario na ang National Development Program ay magdadirect sa pagtaas ng competitiveness ng local products sa global market or developing new industries na nakakapag-produce ng import substitute. Next uses is provide a glimpse of the relationship between flows and stock. So, isa din sa uses nila is ma-enhance when taken together as they provide a glimpse of the relationship between supplies and stock. So, one of the example is yung link between trade in goods and direct investment. So, dahil dito is may papakita kung gaano nakadepende ang potential na kita sa pag-export is on foreign capital and technology. In instances, yung mga external debt problems is matatrace siya through chronic current account deficit. So, ano nga ba yung deficit? Yung deficit is yung deficiency in amount or quality. So, last is likewise, links are established between exchange rates and the strength or weakness of the current and financial account. So, the exchange rate exerts a significant influence on the trade balance and by the extension on the current account. An overvalued currency makes imports cheaper and exports less competitive, thereby widening the current account deficit or narrowing the surplus. Let's discuss the classical theory of comparative advantage. So, the failure of mercantilism served as a valid argument for the benefit of free trade. By the end of the 18th century, merchants gained almost unrestricted economic freedoms. So, what is mercantilism? So, mercantilism is a form of economic nationalism that sought to increase and prosperity and power of a nation through restrictive trade practices. So, Adam Smith is first alluded to the concept of absolute advantage as the basis for international trade in the wealth of nation. So, siya yung leader ng classical economists crusaded for free trade. So, he said that if a foreign country can supply us with the commodity cheaper than we ourselves can make it, better buy it of them with some part of the produce of our own industry employed in a way in which we have some advantage. The general industry of the country being always in proportion to the capital which employs it will not thereby diminish, but only to find out the way in which it can be employed with the greatest advantage. So, sinasabi niya sa theory niya na if our country can produce some set of goods at a lower cost than a foreign country, and if yung foreign country can produce some other set of goods sa lower cost than we can produce them, then clearly it will be the best for us to trade our relatively cheaper goods for their relatively cheaper goods. In this way, yung parehas na bansa is makaka-gain from trade. Next is David Ricardo, refine the theory of comparative advantage. This theory states a country should export those goods in which it has the greatest advantage and import those goods in which it has the greatest disadvantage. So, during that time, yung value or price ng isang product is based sa labor cost as maintained as the classical economy. So, isa sa example ng theory ni David Ricardo is itong nasa table. Makikita natin sa illustration na yung England could commit sa 100 hours of labor para makapag-produce ng 1 unit of cloth or makapag-produce ng 5 or 6 units ng wine. In comparison, ang Portugal could commit 90 hours of labor para makapag-produce ng 1 unit of cloth or 9 or 8 units of wine. So, ang Portugal is possess an absolute advantage in producing cloth due to fewer labor hours. Ang England naman ay merong comparative advantage due to lower opportunity cost.
Causes of balance of payment deficit. Some of the major important causes of deficit and balance of payment are economic factors, political factors, and social factors. So, under the economic factors are the developmental activities. So, developing countries depend on a developed nation for supply of machines, technology, and other equipment. This lead to increased level of imports, thereby resulting in a deficit in the BPO account. Next is the high rate of inflation. When there is an inflation in the economy or in the domestic economy, foreign goods become relatively cheaper as compared to domestic goods. It increases imports which cause a deficit in the balance of payment. So next is the cyclical fluctuation.
When the domestic economy is going through a phase of boom, the domestic production may be unable to satisfy the domestic demand. It leads to a deficit in BPO due to increased imports. Next is change in demand. So fall in demand for countries' goods in the foreign markets leads to fall in exports, and it adversely affects the balance of payment. So lastly, import of services. Underdeveloped countries import service from developed countries for which they have to pay huge amount of money. It leads to a deficit in the balance of payment. Next is the political factors. Under political factors, there are political instability. So political instability may lead to large capital outflows and reduce the inflows of foreign funds, thus creating disequilibrium in the balance of payment. Next is the political disturbances. Frequent change in the government, inadequate support to government in parliament also discourage inflows of capital. This leads to a deficit due to higher outflows than inflows. So last factors is social factors. Under the social factors, demonstration effect. When the people of underdeveloped countries come in contact with those of advanced countries, they start adapting the foreign pattern of consumption. Due to this reason, their imports increase and it leads to an adverse balance of payment for undeveloped country. So last is the change in taste, preference, fashion, and trends. So an unfavorable change for the domestic good leads to a deficit in a balance of payment. Possible solution for a balance of payment deficit. So non-trade factors that can impact the balance of payment include foreign aid paid or received, people moving in and out and taking their money with them, and also individuals sending cash to family members in other nations. So BPO or balance of payment refers to the amount of money that a nation, citizens, government bodies, and world minus the money that they send out. If more money leaves the nation than is coming in, there is a balance of payment deficit, while most money entering and leaving the country is the result of purchases and sales of goods and services. Other factors contribute as well. Non-trade factors that can impact the balance of payment include foreign aid paid or received, people moving in and out and taking their money with them, and individuals sending cash to family in other nations. So here are the possible solutions of balance of payment deficit. First is the make domestic companies more competitive. A balance of payment deficit is likely if foreign corporations produce better goods at a cheaper price than domestic companies. In this case, consumer will purchase important products while the domestic manufacturer will have a hard time selling of their goods to other nations. This will increase the money leaving the nations and decrease the funds coming in. An increase in the quality of domestic products can change the equation. This might involve developing a better educated and more highly trained workforce, lowering the corporate tax burden, or improving the country's infrastructure. So next is the currency devaluation. One short-term solution to a balance of trade deficit is making the nation's currency less valuable. Suppose 1 euro equals 1 US dollar, and therefore a product costing 10 euros in Germany also costs $10 in the US. If the dollar is devalued so that the 1 euro now buys 1.2 US dollars, the same European made product will now cost American consume $12. This will reduce its consumption, shifting some demand to local manufacturers whose price will not increase as a result of currency devaluation. Governments can influence exchange rates through various means such as lowering or raising interest rates. So, next is import taxes and quotas. A direct intervention that will have an immediate impact on a balance of trade deficit is simply putting a cap on the number of certain type of products that can be bought from abroad. Such important quotas will reduce the amount of foreign and the associated fund outflow. No matter the quality of domestic made product, a less dramatic measure involves charging importers some form of important tax or duty. This will not limit the number of imported quantities, but it will make them more expensive and typically reduce their consumption. However, such measures can backfire because foreign nations might take similar steps to reduce the export of nations in question. With fewer exports, a country's balance of trade deficit will not improve. So last is slowing consumer demand. Sometimes the balance of payment deficit results from extravagant spending, such as citizens taking expending trips or gravitating towards luxury and exotic products that can only be sourced from abroad. This is usually accompanied by an increasing in consumer credit balance, as such spending is most easily done on credit cards and borrowed money. Government can partially curb the resulting deficit by slowing economic growth and general consumer demand. This can be done through less government spending, which result in less money in the economy. A rise in interest rates, which raises the cost of borrowing, and increasing taxes to reduce disposable income.